Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar bulls was very determined overnight to take the challenge higher, but as you can see from the challenge, at one point nearly claimed the region of 62.30.35 after posting an intraday high of 62.12.14. From the rejection of the challenge, the market has posted a bearish outside range day. That being said, we still need confirmation to support this candle implication. A bearish engulfing pattern is a technical chart pattern and entails two candles that are formed generally at the end of an uptrend or near potential resistance. We've got an uptrend and potential resistance here. In order to identify this pattern, some conditions must exist. Firstly, holding to the uptrend, this pattern is developed when the uptrend has become exhausted, and I feel the market has, because the attempt above 62 cents did clearly struggle, and therefore the market is actually giving some indication that we are breaking down. But we do need confirmation, and that confirmation would be a break of 60.75. If we see a break of that level, then that would give us further indication that the market is likely to take a challenge back towards the objective seen here at 58.85. Earlier today, the RBA released its minutes of its monetary policy meeting and suggested that the policymakers have no appetite for negative interest rates, and therefore could see that from the emergency meeting on March the 18th, to keep their view on hold at 0.25%. So we have to see. Any advances should fail above 62 cents and all eyes on the level of 60.75. And as mentioned, if breached, opens the way down towards that objective that I'm holding around 58 cents. Little to go on when it comes to the euro, as the market now waits for tomorrow's unemployment claims. Last release, the market number was at 3.2 million. Now the job US claims, that is now looking at 3.5 for tomorrow's release. But the main event really is the non-farm payrolls number, which is looking at negative 100,000, where the previous jobs added was 273,000 last month. And the unemployment rate is looking to raise from the 50-year lows from 3.5 to 3.8%. From a technical point, though, if we are seeing this pattern unfolding and we have recognized the top around 111.60.80, then I do see that the market could actually drop lower towards the region of 108 as a potential target. But confirmation would be from a close under 109.65. The dollar yen outlook still remains somewhat negative, even though we've had a doji and a gravestone, and does indicate that the market is attempting to try and recover. But I would say from this rejection that we are still looking very much down towards the region of 107.25 and then lower to the region of 105.40, with any challenges to the upside seeing a cap roughly around 108.75. But the MACD also breaking down does give better position for the bears to take the challenge lower. I don't have a view on the pound, even though we're getting a bit of whipsaw price action, and I feel at this stage in time that due to the conditions of the market that the volatility will remain high and trading will come at a high risk. So I'd rather leave the pound at present, although I would entertain it if it sees up around, we see it up around 126.70 to 127.45, as this could initiate bearish opportunity. Dollar CAD took a stab to the upside after oil took a slight slip overnight, but rejects the area and now identifies it around 143.50. I do believe that the market is still very much set for a bearish down test and look back towards the region that comes in around 139.45. If we get a break beneath there, then I expect to see further weakness towards 136 as a new objective, which is around this level here. We're wrapping up with gold and oil on the market, as I feared, took the challenge to the downside and took out the level of 1,590 from the break, as exposed the region of 1,550 to 65. after briefly hitting a low close to the level of 66. It is assessed that although the market may attempt to recover, I am still a little bit wary of gold as there's no trend and the bears are still very much lurking. So we could see another test down to the bottom side of this range. So I'm rather not come out with any bullish call yet. Talking of bullish calls, I still remain a bull for oil. I feel the market is breaking higher from this MACD and also from the divergence that's clearly seen from both these indicators of the RSI and the MACD. So therefore, I am looking towards the top side of a challenge coming in soon, around $24 to maybe $26 a barrel, and still views a base around 20. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.